Assalamualaikum and hello everyone. I'm the first presenter. Before we start our presentations, let me introduce myself. My name is Nur Anis binti Othman. Our topic for this presentation is Black Monday on 1987. Before we go deep into the topic, let me share history about Black Monday on 1987. Black Monday is a name commonly given to the global and largely unexpected stock market crash on Monday, 19 October 1987 in Australia and New Zealand. The day referred as the Black Tuesday because time zone different from other countries. The Black Monday occurred when the Dow Jones Industrial Average lost 508 points or 22.6% of its value, marking the largest single-day decline in history. The crash occurred worldwide, starting in Hong Kong and spread to Asia and Europe, and before reached to the United States (US). Two of the major contributing factors to the severity of the Black Monday crash were computerized trading and portfolio insurance trading strategies that hit stock market portfolio by selling short S&P 500 index futures contract.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nofarahin binti Razali. I will continue the presentation with causes of Black Monday. Throughout the last 100 years, many say there were no specific reason of the market crash, but some great investors has predicted the collapse in advance. One of the reasons is a strong bull market overdue for a correction. It is one of the main factors that caused the Black Monday crash. It was a strong bull market that was overdue for a major corrections. Since 1982, the stock market price was the triple in value and rising 44% alone in 1987. Next is the program trading or computerized. Program trading was new to the market in the middle of 1980s. The market crash of 1987 revealed that the innovation of financial and technologies have increased the market volatility. Next is portfolio insurance. Portfolio insurance was a relative new phenomena at the times, seems like the program trading. It involved large number of institutional investors. They hedging their stock portfolio by taking a short positions. Next is the panic mess. A lot of people agree that panic mess caused the market crash to escalate. There are many theories try to explain why the crash occurs. Last is the dollar fall. On October 16, James Baker, as a Treasury Secretary, has announced that United States might let the value of the dollar falls. He wants to make US stock price cheaper for foreign investor. That's all for causes of Black Monday. Next, I will share to you about the lesson from Black Monday. It's been more than 35 years since the market crashed in 1987, but the event still holds some valuable lesson for any investors today. There are few important insights to apply today from the market crash. First is stick to your own strategy. It is important for investors to remember, in investing, the more people believe in one thing, the more the opposite viewpoint turns out to be true. Second is buying opportunities. Knowing that the market crash are temporary, the market crash period is the time that should be taken and or considered as an opportunity to buy the stock. Some investors will have their own shopping list to buy the stock or fund that are attractive at a lower price, while some will sell their stocks. Next is the anticipation beats reaction. Any investor should be ready to survive extremely circumstances with their existing investments mix and have strategy in place how it will be feel in their portfolio loss value. Next is the turn off the noise. If investors don't sell when the markets are falling, they will be their biggest ally. By ignoring the chatter of the media and the crowd and continuing focusing on their long-term objective, long-term investor will get the benefit. That's all from me. Thank you.
Okay, Black Monday happened very quickly but didn't last long. And with the help of central bank who cut interest rate, financial markets in the US and Europe fully recovered. In fact, 5 years later, markets were rising by about 15% a year. A key consequence of the Black Monday crash was the development and implementation of circuit breakers. In the aftermath of 1987 crash, stock exchange worldwide implement circuit breakers that temporarily halt trading when major stock indices declined by a specified percentage. After 6 months of the crash, the world market still hostage to huge swings in the mood. The average bear market lasts about 9 months, but it takes much longer to recover what was lost. It is probably looking at 3 to 4 years out to get back on track. Astonishingly, there was no single factor that triggered the stock market crash of 1987, but thanks to quick thinking from central banks, specifically the US Federal Reserve, a total financial meltdown was largely averted. Unlike the banking panic of 1907, bank run did not occur and the Dow regained its Black Monday losses within 2 trading sessions.
Next is conclusion. What we can conclude from 1987 US Black Monday crisis is stock market crashes have several effects on the economy and investor behavior. Essentially, the overall economy of a country depends on its stock market. Stock market trends still become famous focus when investors intend to invest. The most common way investors are bound to lose their money, but it will provide return towards the investor. You are never going to be right all the time, and things can go wrong. So you have to have a confidence that investment portfolio can stay intact to sustain yourself through the illogical times.